This podcast is for informational purposes only and does not constitute financial advice. Consult with a qualified professional before making any investment decisions.
Welcome to the Wire Weekly Roundup. The week in real estate presented in digestible bites. Hold on while our AI hosts take us on another ride through this week's top real estate headlines.
Welcome back to The Wire, everybody. Thanks for tuning in. Whether you're a real estate enthusiast or a seasoned pro, I think you're going to find this deep dive really interesting.
Yeah, I'm excited for this one. We've got a ton of great reports from our listeners giving us the super detailed look at the housing market as of right now, mid-March 2025.
That's right. And we're looking at the whole picture. You know, national trends, regional variations, buyer and seller behavior.
Okay.
Of course, mortgage rates, and even a look at building permits and overall inventory.
Exactly. And our mission here is to break all of that down for you. Really pull out the insights that matter most, identify the big themes at play, and highlight those fascinating little contradictions that we always seem to find.
Because let's be honest, the real estate market never fails to surprise us, right?
Never a dull moment, and that's why we do this show, right? To help you guys navigate this crazy world of real estate.
Exactly. So let's dive in, and I think one of the first things that jumps out from these reports is just how much variation we're seeing regionally. You know, the national numbers paint one picture, but when you zoom in, things get really interesting.
Oh, absolutely. The regional divergence is a huge theme this time around. Like, look at the Midwest, for example. Prices are really surging there.
That 20% year-over-year jump in median sale price in Milwaukee for February, that's got to be a record, right?
It is a record, and it really highlights how competitive things are getting in those undersupplied Midwestern markets. Detroit and Cleveland are also seeing double-digit percentage increases, so it's definitely a region to watch.
And all the reports are pointing to the same thing, right? Classic supply and demand issue, just not enough homes for sale in those metros.
Exactly. Active listings are down across the board. Detroit, Milwaukee, Cleveland, they're all seeing fewer homes on the market, which is driving those prices up.
It's interesting, though, because even with these price increases, the Midwest still comes out as relatively affordable.
You're right. Detroit, for example, still boasts the lowest median sale price among major metros. So while prices are climbing rapidly, they're starting from a lower base.
Makes you wonder, if those markets are almost playing catch up in a way.
Yeah, there could be some truth to that. And when we look at the bigger picture, one of the reports highlighted lower construction activity in the Midwest, which makes sense. Fewer new homes being built contributes to that tighter supply.
Makes total sense. Okay, so we've got the Midwest picture prices, surging low inventory. What happens when we look at, say, Texas and Florida? Because from what I'm seeing, it's a whole different story down there.
Totally different. I mean, we're actually seeing prices fall in several major metros in Texas and Florida. Austin had the biggest drop, followed by Tampa, San Antonio, and Houston.
Wow, so what's driving that trend? Is it just more homes being built?
Increased supply is definitely a major factor. All these reports are talking about a surge in the number of homes for sale in those Texas and Florida markets.
Yeah.
And the data shows higher building permit activity in places like Austin and Tampa, which backs that up.
But it's not just about more homes, right? I mean, one of the reports specifically mentioned Florida and how things like rising insurance costs, homeowner association fees, and of course the whole natural disaster issue are playing a role.
Oh, yeah, for sure. Those are definitely giving some buyers pause, especially in a place like Florida, where those factors can add a lot of extra expense to homeownership.
Exactly. So this perfect storm of, more homes on the market plus these added costs that are pushing prices down.
And ultimately, that impacts buyer sentiment, right? When the overall cost of ownership goes up, people are naturally going to be less willing to pay top dollar.
Right. Which brings us to the national picture. The median sale price did go up, but that growth is slowing down. And we saw a pretty significant drop in pending home sales nationwide.
Yeah, it's like we've got these two opposing forces at work right now driving those regional differences.
So it's almost like you can't even talk about a national housing market anymore.
Right.
It's really all about what's happening locally.
That's a really good point. The national averages just don't tell the whole story anymore. And what's really interesting is this correlation we're seeing between building permits and price changes.
Meaning places that are building more homes are seeing slower price growth or even decreases.
Exactly, while areas with less construction activity tend to see higher appreciation. It's not a perfect rule, of course, but it definitely holds true in many cases.
Right, and that makes intuitive sense, right? More supply should ease those price pressures. But like you said, there are exceptions. San Diego and San Francisco, for example. saw price declines even though they're not building that much.
Yeah, those are interesting cases, in high-cost areas like that. I think other factors start to take over, things like the overall economic climate, buyer confidence, maybe even an affordability ceiling, where prices have just gotten so high that they're discouraging further buying.
So even if there isn't a ton of new inventory, if demand weakens because of the economy or those sky-high prices, well, prices can still come down.
Exactly. It's a complex interplay of forces at work, and each market has its own unique set of dynamics.
Okay, so let's shift gears a bit and talk about mortgage rates, because that's something that's been on everyone's mind for a while now. And the good news is that rates have generally been trending downward since late 2024.
That's right. And they actually hit their lowest point since October of 2024 in early March 2025, with the 30-year fixed rate averaging around 6.6%.
Okay, so not exactly back to those historical lows, but still a decent drop. And I'm guessing this spurred some activity in the mortgage market.
Oh, absolutely. The MBA data shows a significant jump in mortgage applications, especially for refinances.
Yeah, that 90% year-over-year increase in refi applications is huge. Clearly, people are eager to take advantage of even slightly lower rates.
Absolutely. And purchase applications also saw a bump, so you'd think that would translate directly to more home sales, right?
Seems logical. But here's where things get a little weird, because despite those lower rates, the Fannie Mae Housing Sentiment Index actually dropped, meaning people aren't necessarily feeling super optimistic about the housing market.
It's a bit of a head-scratcher, isn't it? And the reason for that drop in sentiment seems to be increased pessimism about future rate decreases.
So even though rates have come down a bit, people aren't convinced they'll stay low or go much lower, which is fascinating, right? It's like this psychological barrier.
Totally. And it really highlights the importance of market psychology in all of this. Even if rates are slightly better right now, if buyers think they're going to jump back up soon, they might hesitate to buy.
Especially with all the other economic uncertainty out there. The stock market's been volatile. There's still talk about a potential recession.
Yeah.
All of that adds to the anxiety.
Absolutely. And that's what we're seeing in the data, right? Increased buyer interest in terms of tours and online searches. But that's not translating into a surge in signed contracts.
So people are looking, but they're not quite ready to pull the trigger.
They're dipping their toes in the water, but not ready to dive in just yet. And, the expert predictions we looked at are generally suggesting rates will stay in that upper 6% range for March 2025.
With the Fed likely holding off on any rate cuts because of the strong labor market and persistent inflation, right?
Exactly. And then you throw in the potential impact of new tariffs on inflation. It's just another layer of uncertainty that's contributing to that cautious buyer sentiment.
All right, let's talk about inventory, because we keep hearing about this nationwide housing shortage, and one report estimated it to be around 3.8 million homes. That's a big gap to fill.
It is a huge gap, but as we've seen with prices, the inventory situation is very much a regional story.
So where are we seeing the biggest shortages?
Well, Realtor.com data suggests that the South actually has the greatest need for more housing, but they're also seeing the most new construction activity.
So there's hope that they might be able to close that gap sooner rather than later.
That's the optimistic outlook for the South, but it's a different story in other parts of the country. The Midwest and Northeast are facing much more persistent inventory challenges.
Yeah, those projections were pretty stark. The Midwest potentially taking decades to catch up at the current pace of building, and the Northeast maybe never fully closing that gap.
It's definitely a concern, and it goes back to what we were talking about earlier with those rising prices in the Midwest. That lack of supply is a huge driver.
Okay, so nationally active listings did increase in February 2025, hitting their highest level since June 2020. So that sounds like good news, right? More homes on the market?
Well, it's not quite that simple. While the total number of active listings is up, the number of new listings actually went down year over year.
Interesting. So more homes are sitting on the market, but fewer new ones are being added.
And Altos research data from mid-March adds another layer to this. They're seeing a big increase in unsold inventory compared to last year and a higher withdrawal rate.
Ah, that shadow inventory we've been hearing about, meaning listings that are taken off the market without a sale.
Exactly. So you've got more homes sitting unsold and more sellers deciding to pull their listings altogether.
Makes you wonder what's going on there. Are sellers just not getting the offers they want?
That's probably a big part of it. They're testing the waters, but maybe not liking what they see. And then you've got this recent jump in new listings coming onto the market, highest level since September 2024, according to Altos.
So it's like a push and pull, right? Some sellers are jumping in while others are holding back.
It's a really dynamic situation, and it's definitely something to keep an eye on.
Okay, looking at all this data, there's one thing that really stood out to me as a surprise, and that's this disconnect between buyer interest and actual transactions.
You're talking about how we're seeing increased activity in terms of tours and searches, but that's not leading to a corresponding rise in pending sale.
Exactly. It seems counterintuitive.
Yeah.
Lower mortgage rates should theoretically spur more buying activity, but that's not quite what's happening.
It's like this weird lag between interest and action, and I think it really comes down to the economic uncertainty that's out there.
So it's not just about affordability, it's about confidence.
Exactly. People might be tempted by those lower rates, but then they look at the bigger picture and they get nervous about the economy, their jobs, the stock market. All of that weighs on their decision making.
And that seems to be outweighing the incentive of slightly lower borrowing costs for a lot of people.
It's really fascinating to see these non-financial factors playing such a big role right now.
So for our listeners out there, especially those of you who are real estate professionals trying to make sense of all this, what's the key takeaway here?
I think the biggest thing is that strategies have to be hyper-local.
Yeah.
What works in one market might not work in another.
So for folks in the Midwest where inventory is tight and prices are rising, what's the advice?
Well, if you're a listing agent in that market, highlighting move-in ready homes in desirable locations is key. Those are going to be the hottest properties.
And for buyer's agents, it's all about preparing your clients for a competitive environment, right?
Exactly. Be ready to move fast when you find the right property because things are going quickly in those markets.
Okay. And what about for those in Texas and Florida where things are a bit softer?
Well, for sellers in those areas, competitive pricing is going to be essential. You've got to make sure your listing stands out in a market with more inventory.
So agents need to have those honest conversations with their clients about setting realistic expectations.
Absolutely. And don't underestimate the power of good marketing. You really need to showcase those properties effectively to attract buyers.
Makes sense. All right. So nationwide, even with those slightly lower rates, it sounds like managing buyer anxieties is key.
That's right. Staying informed about local inventory levels and price trends is crucial. Resources like Altos Research and Redfin can be really helpful for that.
And for sellers, those increasing withdrawal rates are a signal that, realistic pricing is more important than ever.
Couldn't agree more. You've got to be strategic and work closely with your agent to find that sweet spot that's going to attract buyers.
Well, there you have it, folks, a deep dive into the spring housing market of 2025. And it's safe to say it's a complicated picture out there.
Absolutely. We've got those glimmers of opportunity with lower rates, but the economic uncertainty and those shifting inventory dynamics are creating both challenges and opportunities.
We hope this analysis has given you all a better understanding of what's happening in the market and equipped you with some valuable insights to help you navigate the coming months.
And remember, this is just a snapshot in time. Things are constantly changing, so stay informed, stay adaptable, and as always, thanks for joining us on The Wire.
And one final thought to leave you with as you continue to explore the housing market. What happens to that shadow inventory? Those withdrawn listings, if they start to come back on the market later this year, could that shift the balance of power?
It's a fascinating question and one that we'll definitely be keeping an eye on. So stay tuned, folks. The story of the 2025 housing market is just getting started.
Thanks for listening, everyone. We'll see you next time on The Wire.
See you then.
If you're interested in your own personalized edition of The Wire, please visit us at thewire.fm/custom. We offer market-specific podcasts with all the latest real estate news and market analysis delivered to you weekly or monthly. Own your market with a personalized edition of The Wire, the week in real estate. Thank you for listening.